Sweet. As long as you're in, yeah. Okay. Yep. So what I was talking about before: periods of accumulation, periods of distribution. That is pretty much how you suss out whether a trend reversal is coming. Another thing, but at the end of the day, it's all about trading the probabilities. You don't always have to trade the super highs and the super lows of every single move, because frankly, it's just not going to be possible. Like, even if you do manage to snipe the top, well done on you. But as long as you even just capture like 70-80% of the move, you're all good. You're all Gucci. So yeah, that's that. Let's go into Bitcoin really quickly, and I'll just throw on my own whatchamacallit, these oscillators, and I'll show you what they do, why I use them like that. Not sick. So my mate just asked me. The thing is, with trend reversals, you have so many opportunities to make a trade that it's going to be very, very obvious. So almost every single time, it has faked out. Alright, so if I just map this out, that's a bearish order block. Right, prices trade into it. On the daily, it looks like we whipped right into it, go back down. Alright, so this looks kind of bullish because we traced into a previous. This should be it used to be a bearish order block, but we went right through. So inside there, people are going to go long. So that's a mitigation block. I'm pretty sure. Oh no, you could say it's a breaker. No, mitigation block. Yeah, I don't know, man. I think it was like a mitigation block. Alright, prices go back up there, and people would have been faked out. And the reason why they would have been faked out is because we think, oh look, the candle closed. Bitcoin just closed above previous highs candle, very, very nicely, and we've traded 2 days above that zone. So they're gonna think, oh shit, we're ready for a trend reversal. But this is why I use indicators as double confirmation. Okay, so first of all, on the RSI, we see, oh look, it's forming some sort of a double top swing failure pattern near 60. Right? You can be thinking, that could be not, that could mean something. You look at my fast oscillator, there is very clear, simple bearish divergences occurring, and this is on the daily as well. And if we measure the amount of time between these two, it's about 12 bars. So that's a medium strength. Medium, so I personally think if it's a medium strength, it's going to take a while for it to manifest. If it's really strong, it's going to happen almost instantly. If it's very weak, then it might even take a longer time to kind of bleed out. On the slow oscillator, boom, simple bearish divergence. Yeah, simple bearish divergence. That on top of general chart patterns. So I don't really trade chart patterns a lot, but even just sometimes looking at it, it just gives you, as long as you find, like, chart patterns are good, but only if they're used correctly, and they're only good if you use them in confluence with other fucking tools, techniques at the same time. So we could say that this is a double top. Alright, it's a high time frame double top on the daily, so it's going to have some strength. On the high time frame as well, we are running into a bearish order block. Previous resistance. Additionally, my indicators is struggling to get above 60. I understand that there is a bearish range for RSI, and it's not breaking above that bearish range. You look at previous RSI history, you can look at just straight up raw numerical values, but personally, just looking at previous RSI history, it's already very telling. So it's failed to go above previous RSI high, where it created this first swing failure pattern. That was at 61ish, 61. It's failed to go above it. Second of all, sometimes you won't see this straight away, like fake outs, cool, whatever, but you'll notice that after a while, you look at a pattern, you just get a general feeling, like you just know what's going to happen. I know that prices, like the angle at which prices go up. I don't know how to measure angles in this, but straight up, right? So this is the gradient of the rise in momentum of price there, and this is the gradient of rise in price on the second one. Oh wait, hold on. Let's just take it to the wicks, man, because candle close is just full of shit. Okay, so very low. Okay. So this is the rate of price increase from 6th of February all the way up to 20th of February. And we see that the rate of ascent of price is a lot higher in the first run up versus the second run up. This is pretty much RSI in a nutshell. This is pretty much momentum in a nutshell. And if you remember, Abdul, you know how in high school we did like in methods, there's like fucking differentiation, yeah, of like doing calculus and shit. Why do we do calculus? Right, so say we did, this was your function, this is the x-axis, this is the y-axis. Alright, that's your function. We find the gradient. The reason why we want to find the gradient or the momentum or the rate of change of the price is so we can find out when it's going to flip. And you know, they call this what? The point of inflection, right? So the point of inflection is pretty much all we are trying to find in price as well. If price was a function, the point of inflection is that particular time, is that particular price that we are looking to enter our position. The point of inflection. And this is exactly what the RSI, what oscillators, what momentum oscillators all try to do. We try to derive the function of price, so we know the speed at which it's going up, and just literally just then by, you know, drawing this line out, I've just pretty much just added the momentum variable to it. You know, I've just added the momentum variable to it. So as soon as we find discrepancies of prices going up and not as quickly as they were before, that's how we know that, okay, hold on a minute, shit's not looking good. What does that mean? Maybe there's a price correction occurring. Now, this sort of trading is super high risk. Unless you actually know what's going on, it's super high risk. And the best way to, I guess, make it all work is that you find confluence on every single time frame. So if the hourly is looking bearish, if the 4 hour is looking bearish, the 6, 8, 10, 12, daily, 3 day, if everything is looking fucking bearish, boom, you're in a good trade. Sorry, you're in a good short. If everything is looking bullish, then you're in a good long. Simple as that. So yeah, that's in a real quick nutshell. That's pretty much why you would use a momentum oscillator, and you use that in conjunction with support and resistance, in conjunction with your indicators, in conjunction with volume, in conjunction with your EMAs, in conjunction with your TD sequential, so timing, in conjunction with the day of the week, the time, and honestly, you do all that, you're fucking primed for a good. You're all good. Like straight up, you're going to be fine. You're going to do well at trading. Simple as that. So yeah, that's really quickly. That's how you find out momentum difference. Now, what do we want to look out for? Alright, what we're going for? Just looking at this as a real quick TD sequential. Let's turn that off. Okay, so what I'm going to do now is I'm going to go jump on the replay tool. Replay tool is really good because fucking like literally the replay tool is like my bread and butter. It's like my savior, man. Okay, so what I've done is I've just gotten rid of everything on the right. And I'm going to talk to you and go through what I think is going on. Okay. You use everything. You use candlestick patterns, chart patterns, everything. You use everything in conjunction, and you are all good. All right. I've established there is a bearish order block here, confluent with this one as well. Right, so this is on the daily. I also notice on the daily that there is a doji, people's daily doji candle or shooting star. This stuff will come to you gradually. Daily doji candle or a shooting star. Instantly you start thinking to yourself, trend reversal. The reason why you think trend reversal is because shooting stars and doji candles are usually signs of indecision, and they're climactic. Climactic meaning the market doesn't really know what it wants to do. And when that happens, you got to think to yourself, okay, maybe there's a reversal coming, and use that in conjunction with volume. That is a good sign as to okay, maybe something's going to happen. Now let me show you what I mean. Shooting star candle. I might actually have everything. Hold on. I have no, not there. Candlesticks. Let's have a look at all of these. I don't know which one it is. I just sometimes I have them open. So doji, neutral pattern, which could have different meanings based on the context. So if you see doji near the bottom, that could mean price wants to go up. If you see doji at the top, it could mean price wants to go down. That's pretty much what I think. Hammer or pin, reversals. Depends on where they are. If there's a hammer or pin on the top, that's going to go down. If there's a hammer or pin on the bottom, that should, it suggests that it wants to go up. So we see this. There we go. Inverted shadow or a hammer. That is what it's showing up on the daily. And if it's showing that on the daily, you need to start thinking to yourself, okay, I need to be careful. Alright, why do I need to be careful? Why? You think to yourself, tell yourself, why? Why do I need to be careful? Because potentially, I'm running into resistance. Alright? Additionally, additionally, there's something called marker structure, which I'll talk about later, but it's pretty much saying, taking into the idea of swing highs and swing lows. Alright? So, but we'll talk about that later. Okay? So you've got bearish order block. So that's resistance. Alright? So I'm gonna mark down what I'm going through, okay? So personally, this is what I look out for when I'm trading. Resistance. 2. I'm gonna look at my TD. That is my timing. And I double check that with Elliott wave. Don't check it with Elliott wave, by the way. Elliott wave shit. Okay. Green 9 going up. The 7th candle. Look, whatever. And I'm still learning TD, so TD I'll use rarely, but if I'm gonna do everything right, I might as well talk about it as well. Elliott wave. Now I remember this was a very hard count to do. Yeah, I remember this was a very hard count to do, but we had something like this, like a 1, 2, 3, 4, 5. Now I know with Elliott wave, we're looking for 5 waves up. That's what I'm anticipating. Because at this time, I don't know if the correction is complete or not. So until the correction is complete, like the entire market structure correction has been complete, I'm going to have to assume bullishness. And if I'm going to assume bullishness, I need to assume that this is the beginning of a new impulse. Elliott wave stuff we can go into later. It's honestly, it's a waste of time. So sometimes I don't even bother with this, but sometimes it helps you determine, okay, where is it going to go up? Like, what am I looking for when it goes up? Alright, so Elliott wave at this time says, okay, maybe there's one more up. Sometimes it could be wrong, sometimes it could be right. You never really know. And this is all on the daily, okay? Then I look at my EMAs. What's this? 9 and the 8A looking to crossover. That is looking scary. That is looking quite scary. And the reason why it's looking quite scary is because death cross. We had a bull cross over here, although it was very delayed. And this we're gonna have a death cross over here. Bull cross usually means okay, we go up afterwards. Death cross means okay, we go down afterwards. Alright? So clean up the charts a little bit. We have a daily bearish order block. We have a daily shooting star. daily shooting star. I'm not going to go into the weekly and the 3 day. I just can't be fucked at the moment. Alright, so daily shooting star. Now I have a look at my indicators. Okay. Look at my indicators. First thing I notice, double top, and especially because it's over such a very small period. 3 bars, that's very powerful, because the shorter, remember what I said before, the shorter the divergence, the more rapid the dump's going to be, or the more rapid the move's going to happen. We had a 3 bar divergence, and almost instantly, literally the day this candle fucking closed, we've just plummeted downwards. Right. So, okay, there we go, that's fair enough. At this point in time, we need to assume bullishness, because I guess you could say, actually, I'll tell you what, at this point in time, we don't really know what's going on. Well, at least personally, on the daily, it's not really saying much. On the daily, it's saying this could just be a correction. Coolios, whatever, alright? Now, ideally, I'd be going to the weekly charts, and I'm going to find out the weekly support, the opens and the closes, and see how prices are reacting towards that. But sometimes, you know, shit happens. We forget. Okay, so this is the 20, and also sometimes, look, if I'm going to go in the weekly, I'm going to have to I'm going to redo my replay and all that kind of shit. So it's going to get boring. So I'm going to open up a different tab because I want to keep this one. Let's jump on the 4 hourly. (25th of February), remember? 25th. Oh, well, let's just say it's here. Okay, let's just say it was here. Replay. Okay, 25th of February. We're here now. Here. Alright, so I've established that there's a daily bearish order block, which is around here. Shooting star on the 1 day, which was here. And now we're looking at the 4 hourly. Now, before I go on, I need to piss, so I'll be right back. Alright, I'm back. Okay, so now that I've checked it on the daily, I now know what to expect. Now, normally I'd go into smaller time frames. I might go on the 12 hourly afterwards, but yeah, normally I've gone to smaller time frames. So let's just have a look at the 4 hourly and see what's going on. Alright, so on the 4 hourly we created a momentum high here at this point. Created a momentum high there. I know what to expect. Alright, I know that this is a high, and we should be shorting the next rally up. And oftentimes what you'll notice is, in terms of Elliott wave, is that momentum highs, personally, from what I find, I've often found on third waves. And fifth waves usually set up to be a beautiful shorting opportunity, But then again, I don't really look at LE waves, so but I do notice that with momentum highs, expect another weak rally up. Okay, so momentum high, divergence, simple divergence. Now you don't trade off this all the time, because if you just traded off this all the time, you'd be fucking losing money. The idea is that you use this in conjunction with every single other tool that I've been talking about. The more strategies you can find that link up with this idea, the more powerful it becomes. Alright, so we've got a general like 14 to 17 bar, so it's going to be a relatively medium strength. But the main thing is, we see that there is a M. Remember what I said before, the shorter the period between the divergence, the more powerful it is. 3 bars. Almost instantly we fell off the cliff. Almost instantly we fell off the cliff. Alright, now what else has happened is that something called market structure has been broken. So we notice that prices go up and down, up and down, up and down, right? This is what we call a swing low, a candle surrounded by a candle. So a low candle which is surrounded by a candle that has a higher low next to it and a higher low to the right of it. So these 3 candles, they form a swing high. 1, 2, 3. You could almost look. Being pedantic, this technically shouldn't really be a swing high because this candle has a high to the right, high to the left. But who the fuck cares, alright? You just point out the highs and lows. Alright, just do it by eye. This will be another swing high. Alright, so we know that in order for bullishness to ensue, you need to make higher highs, you need to make higher lows. Alright. Bitcoin has been sort of doing that. Look at that. High highs, high highs, higher highs, higher highs. Ooh, not so much a higher high, but we're getting consistently higher lows, 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 right? And once the higher lows been taken out, you need to think to yourself, okay, that's very sus. We need to assume bearishness. Alright? We need to assume bearishness. And any rally above it should be suspicious. And the more higher time frame that this occurs on, the more relevant it becomes, the more powerful it is. Right. So I'm going to remove all the drawing tools. Right. I've established that there is a swing low that has now been taken out. We need to assume bearishness right now, straight away. We need to assume bearishness. However, we do have, even though it's making a lower low, we've got RSI divergence, and main thing is we see a W. We see a W that's occurring over 2 periods. 2 periods. So we know, okay, we should be expecting some sort of a blow up. And look, I've just removed everything on the right, so I'm expecting prices to blow up. Okay. Looks like I was wrong. Which, okay, now this is what we call a fake out, yeah? This is what we call fake outs. These patterns are not solidified in stone until fucking price actually goes well, like it breaks out like almost previous highs. But now that we know that there is a premise of, okay, look, RSI is failing to make any lower lows, we are looking to be entering some sort of a bullish order block, which is here. And if I use Fibonacci, drawing it from this major swing low to this swing high, it's the 618. 618 golden pocket. If I draw from the very bottom, I'm guessing this is a 382. Just below 382. Right. Yeah, I don't know, like drawing fibs, sometimes you just have to experiment, and after a while, like it's just like gut feeling. Like something tells you to go from here. I can't explain to you why I think it's from there, but I know, okay, look, 618 is this bullish order block. This week is zoned to be longing, even just for a short time. So there we go. Okay, so this is what we call local market structure right now. This is what we call local market structure right now. I'm going to remove this. Right, this is, so we've got large time frame market structure. Larger time frame market structure has not been altered. I know on the daily we had swing lows around here. As long as those are not taken out, on the daily we are still looking bullish. On the 4 hourly we had this taken out. Alright, we had this low taken out. As soon as that low is taken out over here, we need to assume bearishness, and every rally above into it is a short order rally. Alright, you short there, you go down. Go into this bullish order block. Once you hit a bullish order block, you need to start thinking to yourself, okay. Expect some sort of a bounce. Additionally, if we have a look here, notice all these smooth highs around what, 9800-ish. Smooth highs at 9800, we need to assume nothing but bearishness, and as soon as prices bust right through these swing highs, local market structure has shifted bullish, because remember, in order for you to get in order for bearishness to continue, you need to be making lower lows, and lower highs. Alright, so we've got a lower low, lower highs, and now we wait to see what this does. Alright, so this was a lower high. This is local. Now this is busted right through it. Now we need to see what it does in relation to this level, 10.5k. As soon as we bust through 10.5, we can start to assume bullishness again. Alright, so right now we know local market structure has shifted. So if you're looking for a very small time frame scalp, you can look to long around here like 9800 for relatively risk free. And look, I'm going to expect prices to, if it does retrace, it'll retrace down here and then continue, or it just consolidate around this area and then bust right through. There we go. Okay, so now that it's busted right through, it's blown the 10.5k resistance. You need to be thinking. Oh, that is if you're gonna scalp that. I'm in a short-term buy structure, so I should be looking to long. Whatever happens. I should be looking to long on a retrace. Okay. But sometimes it's so bullish that it won't really give you a retrace. But there we go. Their candle, this candle, these candles right here. I'll be looking to buy these ones. Because that's previous resistance here. Yep, you bought those candles. Nice. Traded right into this bearish order block. You would have sold some off there. There is another. Hold on. Pause. There is a bullish order block that formed here. The last red candle before breaking market structure, and this would have been a nice zone to long. And you're targeting, so you long around what, 10.4 down to 10.1, and you're targeting previous highs. Stop loss probably like 10k, 10k. So you're targeting previous highs. Right, you're still holding on to the trade. Boom, you start offloading some of them. Okay, so you start to offload some of them, and now you see the candles are trading right into this bearish order block. When you see this happen, you need to be worried. You need to be looking just fucking scared shitless. The reason why you want to be looking scared shitless is because straight up you're trading into resistance. You're closing inside of resistance. That is never a good sign if you're in a short. Which is why, I was telling you, we had a buy structure program. You long support, you sell resistance. Right? If I'm looking at my 4-hourly RSI, I'm thinking to myself, oh, okay, look at that. There's a bit of weakness there. The fast oscillator is definitely showing some sort of divergence. The slow oscillator is most definitely showing some sort of divergence. Alright, we made a momentum high here, which historically has also been momentum highs, and now we need to be looking at some sort of top for the second one, i.e. you want to be shorting the top of this one. Where do we see? If we look up, right now we're trading through this. Where is our next zone of resistance? The last bullish candle before the move down. This is our next resistance. I've paused it just for effect. I'm fully expecting price to go right inside there, and if I had to hazard a guess, the 4-hourly should form a swing fairly pattern of 4.455 or thereabouts. Alright, doesn't have to be fucking exact. On our RSI, I'm thinking to myself, 65 we're passing through right now. We should be looking at some sort of momentum high soon. Okay, So let's see what happens. So I've already set my orders inside here. Like I've already set my orders inside here, and now my job is just to simply wait and see if they fill. So we formed a momentum high. We've busted right through this resistance. We should be aiming for this zone right here. Okay, pause. Pause. Look at the accuracy. Sorry, I drew the box a little bit off. Look at this accuracy. So the very low of this candle, 11.522. Look at where the prices hit. This is what I'm talking about. Like ICT is a god. This is why he's a god. This is why he's a god. Literally to the fucking dollar. Literally to the fucking dollar. Alright. Now these zones, yeah, they're cool and all, right? But what you should be doing is you should be setting cells. You should be setting your orders literally just outside of them. Right? I mean, at least that's what I do. I've established that this is a bearish order block. Right. I've also established that there is a bit of on the daily that we're still looking bullish. However, on the 4 hourly, I'm looking at the RSI and I'm already noticing that there is a bit of weakness. I'm definitely noticing some sort of weakness over here. I'm expecting some sort of a retrace or some sort of rejection to be occurring at these lines. Why? Because these are previous resistances, RSI resistances, and the RSI 4 hourly is showing a little bit of divergence. On the daily, I'll quickly jump on the daily over here. Let me speed up a little bit. Pause. Okay, so on the daily, look, I know that we are still bearish until we clear 60. I know we're still bearish until we clear 60. We have not cleared 60. The fast oscillator is most definitely forming, looks like it's forming some sort of a divergence. I'm looking on the 12 on the slow oscillator, and again this is definitely forming some sort of a double top with divergence. And I can tell I'm going to jump on the 12 hourly because most of my magic is inside there, and I'm going to go double check. I'm going to double check. I'm going to jump onto Bitfinex because that's where the magic is. Where is this? Where are we? Let's go on the 12 hourly on Bitfinex. I probably should have put this onto the BitMEX chart, but yeah, whatever. Okay. Now on the BitMEX 12 hourly, let's bring the replay to about here. Okay. And let's take a look at the RSI. Okay. So prices closed higher than this area right here, than this zone right here. RSI has struggled to get above previous high at 67. We've struggled to go above previous high 67. And we've ended up closing at 66. I'm looking on my fast oscillator and I'm noticing that there is some sort of a divergence forming. Look at that. There we go. That said, you can also argue that this is some sort of a negative divergence right here, because this was a very high. You could say that right now, they call this, you could say it's almost like hidden bearish. I call it negative divergence. I'm looking on my 12 hourly oscillator, slow oscillator, and look at that clear simple bearish divergence. Right, so on the 12 hourly it's pointing bearish, on the daily it's kind of looking bearish, on the 4 hourly it's sort of bearish, we don't really know. But if we also had to use chart patterns, what do we notice here? A rising wedge of sorts. So we have so many like confluent big bearish signals that you honestly you just can't ignore it. And if I were to keep playing, my bet is if we don't dump from here, we go up there one more time just to tap back into side here, rate the highs of sold there, because that's where the liquidity is, and then we just proceed just to dump to oblivion. Cool. Busted right through it. Guess we're gonna trade into. We're going to trade right into that bearish order block, and right now my orders will have been filled. On the slow oscillator, I'm noticing that there's already some sort of a divergence again. Look, this high, the slow oscillator has failed to make a new high. The fast oscillator has failed to make a new high. The RSI has failed to make a new high. It's trading into resistance. Volume is dropping despite price going up. It's forming a rising wedge of sorts and is retesting it. The 12 hourly, let's have a look. What day is this? The 4th of March. 4th of March. Alright, so let's play one more candle. One more candle. This has not even gotten even close to getting back up here. So honestly, at the moment, there's no reason to assume bullishness. Additionally, what I've done on the 12 hourly is I've mapped out the zones of pumps and dumps. So depending on where we cross on this map, it'll determine the level of bearishness or bullishness that we're going through. And I do have a cheat sheet for it. Well, at least I call it the cheat sheet. Let's fuck that. This is my entire lap, so I've got thick black, I've got red, I've got thin purple, cyan, whatever. All of this is my cheat sheet. This is what I double check when I'm looking at the 12 hourly RSI, because it's a good time frame to be looking for trade setups. I feel like, right? So I'm looking on the 12 hourly and I'm thinking to myself, okay. Yeah, look, the indicators are going to sort of pointing bearish. Daily is pointing bearish. Every single indicator is always pointing bearish. And I'm thinking to myself, okay, there's like, look, even price going up, but the indicators are slowing down. Daily is slowing down. 12 hourly is slowing down. 4 hourly is slowing down. There's almost no reason for me to think, why? You know, there's almost no reason for me to think, okay, we're going to continue going up. Simple as that. Additionally, on the 4 hourly, what am I noticing? I'm noticing hammers. I'm noticing dojis. I'm noticing hammers. I'm noticing inverted hammers. Inverted hammers, normal hammers, all that kind of shit forming at resistance is usually bearish. Yeah, we might push up one more time. The rest of my orders have been filled, and now proceed. Now we wait for this low, this 11,076 to be taken out. Boom, 11,076 has now been taken out, and now we can assume on the 4 hourly that we're going to be bearish. And where I'm expecting prices, like if prices are to bounce, I'm expecting them to go back into this zone around here. Alright, RSI has completely fallen off the roof, and if I play it on the 12 hourly, okay, cool. Alright, so you could say that this is bullish engulfing. Cool, volume's pretty good as well, but look at this again, that's a doji, and that's a doji that's forming at previous resistance as well. You need to be batshit scared. That's also bearishly diverging, simple bearish divergence, and remember what I said, if it's occurring over a smaller period, how many periods is this? This is 2 periods thus far, right? We don't really know, we don't really know until something's happened, but this is 2 periods thus far. We need to be really, really scared. On the fast oscillator, look, it's not really showing us anything yet, but on the slow oscillator, the histogram's already bending over, and I'm noticing that this the 12 hourly slow oscillator is pushing into one of my short zones. Right, and if we play the tape, I'm going to assume that the next candle or two we're going to fall. Okay, so just before this candle, just as this candle formed, that's an inverted hammer. That is very bearish. Very, very bearish. In conjunction with all the other signs that are already occurring right now, that's very bearish. Alright, so it takes out a 12-hourly swing low of sorts. 12-hourly, we are definitely in a sell structure right now. 12-hourly, we're in a sell structure. 4-hourly, we've taken out this swing low, so we're in a sell structure. Daily, let's play it out. Okay, so on the daily, not really yet. Alright, so you would have just seen this candle form. You would have seen this top form. And then over the next couple of days, you would have seen these things to form, and that is very bearish. That is very, 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 very bearish. We've just seen completed distribution. Now, if prices is going to bounce, it very well may bounce. It should go into previous resistance or previous support, now turned resistance. For instance, this zone, or it could just simply fall right through. And if it does fall right through, it'll probably settle around this zone again. Right, it'll probably settle around this zone again because this is previous support, and once we break it, it now turns into resistance. Okay, really simple. So let's play this out, and watch how prices respect these green boxes. As dumb as they look, watch how prices respect these green boxes. Okay, look at that. Okay, so we bust right through the green box, we go back inside, literally nick it, continue to go down, we bounce off the top of this green box, bounce off, fucking plummet right through, and where we're going to end up. Boom, where do we end up? Right into this green box. Right into this green box. So right here, you would have closed out some of your short. Beautiful. Railroad tracks. You'd be thinking to yourself, okay, look, that's not too bad. You would have longed inside there, and now you'd be looking to sell probably around here, around 10k-ish. You'd be looking to sell as soon as you hit 10k. You would have offloaded some of your position inside there, you would have just done that as a hedge, and then your main position should still be short because you've just taken out these swing lows. Right, as soon as you take out so many swing lows, your main job is just to be looking to add to a short or enter a short position. Wait a minute. So if I continue this on the 12-hourly, on the 12-hourly, we just fucking nuked the shit out of this. Nuked the living shit out of it. Now at this point on the 12-hourly, you would have noticed, oh, look at this. Look at that. What's that? Positive bullish divergence. Positive divergence. 12-hourly, we don't really know what to expect really, because you're only looking at this to find the very, very tops and the very bottoms. If there's no divergence, you don't even bother to play it. You don't even bother to look at that. Cool. So right now, you'd be dumb not to be taking profit, because you don't know what's going to happen. Right? You don't know what's going to happen. You'd be dumb as shit not to be taking profit. But right now, the most of your work has already been done, because you would have entered short up here. You would have taken some profit on your short down there. You move your stop loss down to your entry, and then you just let it play out. You short any rally there is because you've just taken out so many swing lows, and the rest is history. That's a really quick breakdown of trading, I guess, market structures, breakdowns, and all that kind of stuff. That's what I look for when I'm trading. Obviously, these are the most profitable ones because you're literally catching the very tops, but it's also the most risky. But obviously, the more patterns that you can get to kind of coincide with what your general bias is, then you'll be all good. You know, you'll be all fine. You'll be doing just fine. You'll be doing no worries at all. So yeah, that's pretty much what I do when I'm looking at these, looking at my oscillators. I look at these oscillators only for divergences. RSI I mainly use for divergences. You can use it to tell you what kind of market you're in, but price already tells you that already. I have written up a RSI note, which I'll drop a link over here. But yeah. Do you have any questions, or do you have any? Oh shit! I haven't done my fucking update yet. Shit. Wait, no. Oh, thank fuck, man. I thought I cleared all this. Thank fuck, I thought I cleared off all that. I do want to check the price on this though. Yeah, so Bitcoin daily, not even close to closing yet. Volume has completely dried up. Usually when that happens, fucking we're down. Hold on a minute. Hold on a minute. Okay. So on the daily, look, it's not really special at the moment. Yeah, it's nothing too fancy at the moment. This could just be a correction. Looking at the oscillators, no real divergences, so I'm not too fast. Fast oscillator, no real divergences. RSI, we're still being contained by the slow moving average and the fast moving average, so I'm not too stressed about that either. The EMAs, we are trading into the 18. We don't want it to break too much above the 18 if we're gonna see further downside action. And resistances wise, we have traded into this breaker back here, so 6600 on Bitfinex. Looking on the 12 hourly, Bitfinex Beast is painting a short. Divergence is very small, but you'll see it 2 bars of divergence over 2 periods. It's reaching one of my short zones, like this zone is where I'm looking to short. That said, it has sort of gone through it, so this could be bullish. 12 hourly market structure is still bullish. We have not taken out the lower 6350 on BitMEX. It has, but on BitMEX it's super highly leveraged, so there's more liquidity, or imaginary liquidity, than there really should be. I've got 4 hours left on the candle close, so let's not rush to any conclusions just yet. We may have formed some sort of a momentum high on the 10 hourly. It does sort of look like a running flat, so that could be bullish. These wicks, these heavy wicks just running down is pretty bullish. 8 hourly. Ooh, if this closes the way it does right now in 20 minutes, that will be kind of bearish because it's closed below previous swing low. That said, it has not formed a lower swing low. Momentum high, we're noticing some sort of a simple bearish divergence on the RSI and also the fast oscillator. 6 hourly, painting a short, slow oscillator, not really telling me much. It's only telling me that there's a momentum high. On this slow fast oscillator there is a simple bearish divergence. Fuck. Wait, where to go? Okay, that's it on the 6 hourly, depending on where this closes really. we could be forming a simple, no, it's not a simple, a positive divergence. Looking on the 4 hourly, that's just a massive wick down. If this closes above 64, 62 on Bitfinex, then I'll be pretty bullish. Because otherwise this is just forming a simple bearish divergence. Fast oscillator, or the divergence has already played out at what, 65.54, so you would have played a nice 100 point drop. The fast oscillator has already formed a momentum high, so we should be expecting another run up. Yeah, look, I might even close out this short, to be honest. On the hourly, yeah, on the hourly, if this is really low, fast oscillator not really telling me much. Slow oscillator there is telling me, but it's over a very large period, so it's not as significant or as powerful as it was before. It is telling me to short. There's no real long yet, so yeah, having a looking at the oscillator, not really telling me much other than my double bottom down there. But yeah, okay, so short time frames, you could say tentatively bullish, 4 hourly sort of bullish, 6 hourly sort of bullish, 8 hourly meh, 10 is meh again, 12 hourly is sort of bullish, daily is daily, look, there's no reason to assume bearishness. Daily, there's no real reason to assume bearishness. Daily, I'm still undecided, really. It's coiling up inside of this, though, and that's, like, we do hell. We might even just trade sideways for the next fucking couple of days, before we make one more leg up. Look, right now it's just it's just plain fuckery. We don't really know what's going on. I feel like it's more in the hands of the large institutional traders than it is TA. Like, TA is great and all, but like TA worked better back in February and in May, to an extent in July, and sort of around here as well. But it's like they've been hiding their moves and all that kind of shit. No, it's all good. Look, I think I might wrap it up now. Then I think I might wrap it up. Might do something later. So yeah, we'll see how we go. I'll call it a day. Let me know if you guys want us to run another stream. Yeah. Alright, catch you later.